G'day everyone and welcome to another episode of the Aussie Investing Machine. Welcome back to the channel. In this episode I wanted to give you a portfolio update and show you the stock that I purchased towards the end of last week. That company is called Cochlear Limited. Cochlear, as you may know, is a manufacturer and distributor of implant hearing devices. So they help people who are deaf or partially deaf. It helps them hear better. There's an implant that gets inserted in behind the skull, and then there's a device that sits on the outside of the skull, and through a connection to the nervous system, this helps people who are faint of hearing hear a lot better. This is obviously a pioneering Australian technology, and it has been doing really well for a number of years. The conditions, however, throughout 2020 have had a real impact on the business, with a drop in elective surgeries. As we know, definitely in Australia, elective surgeries got put on hold for a number of months as hospitals were anticipating higher and higher patient numbers. So because of this, their revenue has suffered, and as a consequence, their share price has slumped a little bit. However, I've got a lot of belief in the future of the company, and therefore I decided to invest. In this episode, we'll go through how my portfolio is looking at the moment with that addition. We'll go through Cochlear in detail, look at one of their investor presentations, and go over all of the reasons why I thought they'd be a good investment. So just to start off here, we can see here on Self-Wealth, you can see my portfolio here. Pushpay, which was probably my worst performing holding that I showed you on the last update video, is starting to recover. Kogan is now sitting in worst place in terms of percentage loss. Northern Star, I thought I got a good entry point there at 12.84, has slumped to 11.98. I might even consider topping up on that because I do have a lot of faith in that company to deliver the goods. I am planning to do a bit of a rebalance in the portfolio. I'm not super happy with the quantity of stocks I've got in this portfolio. I think it could do with condensing and then shifting the focus a little bit to more blue chip growth stocks in the ASX. I think in terms of finding some more growth stocks, I think some US stocks will be really important to add to the portfolio, and I'll be doing that over the next few months, and I'll obviously keep you in the loop. I might also even do a bit of an investment thesis video where I go over my new approach and hopefully start to increase those gains well over 10% and bring in some dividends as well. As we can see, top performer was Beach Energy. It's been doing really well. Again, it's probably not a company that really aligns with my long-term focus, but certainly for the companies that have brought in a profit, I will definitely wait the full 12 months so I can get that capital gains discount. Speaking of capital gains, that's probably another topic of a video I want to do soon, so watch out for that one. Let's jump in straight to the market index page for Cochlear. We can see this price movement. I'll pull it out over 5 years. As you can see, some nice linear progression. Started to fall off right at the start of 2020 for reasons we'll go over shortly. But I do see in the future this nice linear growth continuing. Over the past 10 years, as you can see, sort of since 2014, it's been an extremely strong performer. The 52-week range, 154 was the lowest, would have been a great entry point to the company all the way back in sort of February, almost, yeah, around that sort of region. 1 year return is dismal at negative 15%, but as I mentioned, the company's had some pretty hard times throughout 2020. You can see here the earnings per share is negative. 2020 proved to be so difficult for the company that they couldn't turn a profit. And that wasn't just because of a lack of revenue. There were also some legal proceedings which they lost, unfortunately, and there's quite a big payout they had to make there to make up for that. In terms of the company overview here, we're seeing a next lot of results on the 16th of Feb, so coming up in just over a week, and I think we'll see some more positive news out of the company at this point in time. Looking at their dividend payout history, it is quite impressive. It's been trending up It's only dipped slightly in 2015, but for the most part, we're seeing a nice increase in their dividend. They decided not to pay out their second dividend in 2020 for obvious reasons. They're not turning a profit. There's no profits to pay out. But I really think that the year that has been in 2020 is so unpredictable, especially for this company. The reasons they've lost revenue is totally out of their control, and it would have been really hard for them to foresee. Having a look down at their ownership structure, we can see mostly institutional owners. HSBC with a massive 43% stake. So the institutions are heavily invested in this stock. They know it's a good one to hold, and I've got no problem with that with a stock that's this size and has been seeing such great progression over a number of years now. So we can see here the director transactions, mostly buying activity here, which is good. A couple of big sells from Dig Howard. However, this is offset by a lot of buying from the same person. We can see a buy here of 3 million, 3 million again. And if we go back in history, we can see more of the same. So nothing untoward here. Let's move on to their investor presentation, and we'll go through a few of the key slides. So this is Cochlear's investor presentation. We can see here on the very first slide, this is one of their devices, and this is the magnet that connects to the implant on the side of the head. So if we scroll down, we can see the board of directors, the company's mission statement, and then their strategic priorities, which is retaining market leadership, growing the hearing implant market, and delivering consistent revenue and earnings growth. So some great focuses here. This page goes over their market leading product portfolio. So here are some of those devices we were talking about before. We can see the sound processors, the implants, and the electrode, which are the three key components of their hardware. Also here we're seeing some, I guess, more future geared technology, which is their direct streaming to smartphone apps, which is really cool, and some directional focus hearing sort of stuff. So shows us that, you know, this is their legacy tech, which obviously is being updated, but they've also got other focuses here with their Nucleus Smart app. So we can see on this slide, it shows how fully integrated the company is into the entire process. So making the implant hardware, the sound processors, but also providing clinical and surgical tools to assist in the installation of their devices. And then, like we spoke about before, their connected care app. So now jumping over to their annual report, there's a page here on their financial history. We can see this really strong progress they've had all the way since their sort of beginnings in 1996, and then this, I guess, disruption that we've had in financial year 20. Everything's taken a little bit of a hit. Implant unit sales down by 7%, the revenue down by 6%, and then the net profit down by a whopping 42%. And that is because of those other costs that we'll get to in a moment, in particular those legal fees and settlement of that IP dispute they had. And now I've switched to another report from the company, which is their FY20 analyst slides. So we can see here, Cochlear at a glance, they hold 60% of the global market share for this device technology, which is a huge portion of total sales in this market. We can see where they're operating in the Americas, Asia Pacific, and then a mix between developed and emerging markets. Here are their key products. You can see a summary there. Overall, I think this is a great snapshot slide. So here, this slide gives us more of a detailed rundown about their FY20 results, and it really points out that massive anomaly we had, which was the reason for their net profit falling so much. So the sales revenue was only down 6%, as we mentioned, but the underlying net profit is down 42%. And this is primarily because of this 416 mil in patent litigation expenses. The net loss is 238 mil. If those costs weren't present, they would have been profitable. It's as simple as that. So yeah, an extra cost here, 75 mil for pre-judgment interest and attorney's fees. So across the board, this has been a big hit to the company. They have, however, undergone a capital raising and secured some new debt facilities as well to help strengthen the books and get them ready to launch in 2021. So the outlook is also improving going forward into 2021 with recommencement of elective surgeries, They haven't provided any net profit guidance because there's still too much uncertainty to be able to do that. And as we spoke about before, the dividend has been suspended. So we can see here another slide on their operations in review. Before things started going bad for them in 2020, they did have a 13% increase in sales. So that's excellent growth. And if we can see that again in FY 2021, that's really great news. So I believe that they will be able to replicate that same success. Talking a little bit more here about the disruption that occurred, and then that they've continued to invest in R&D. There is an important note here on this slide, I think. So they mentioned, despite the bad turn with their costs and lack of revenue, there's limited ability to reduce the cost base of the company, with their people accounting for 2/3 of the operating expense. They chose to maintain their employee base instead of firing them, because they are their most valuable asset. And I think that's a great thing for a company to acknowledge. They've taken the hit, but they've kept on all of their staff, which is, I think, a really great model for a company. If they value their staff, the last thing you'd want to be doing is getting rid of them. Especially when you own 60% of the market share, you don't want people with the knowledge of your company leaving and helping boost other companies. So great decision by management there. They have, however, reduced some non-essential spending, and they say they will continue to do this until there's a sustained increase in surgeries for their product. If we look at their detailed profit and loss statement on this page, we can see they provide an explanation for each of the figures that are reported on this page. So we can see this operating expenses. There's been some foreign exchange contract losses due to a low Australian dollar. Overall, the decline has been driven by the situation in 2020, continued investment in market growth initiatives despite the downturn, and R&D investment was maintained. So they're doing a couple of good things here to stabilize the business and make sure there is something to jump onto in 2021, which I think is really good. Here we can see this massive loss, costs associated with an adverse litigation judgment relating to a long-running patent infringement case. So obviously it wasn't one they were expecting to go the other way. It has, and as you can see, that's the biggest loss on the page reported. So much bigger than their operating expenses in total. So, not quite. So 748. It's just over half of their operating expenses, which is a huge knock to the company. On this page, we can see a summary of their dividends as well. So we've got this ordinary dividends paid in FY19. It was $3.30. In FY20, it was stopped short at $1.60. What's positive here is we can see the payout ratio, even at $3.30, is only 72% of profits, which is, it's on the high side, but it's not in the 90s. There's still room for movement. There's still room to grow the dividend. We can also see the dividend is fully franked, which is a massive bonus. If you're an Australian tax resident, it's really awesome to have a fully franked dividend, and it can mean that your investing dollars go a lot further. So on this page, we can see their major CapEx expenditure projects, which are progressing to plan. So this includes their new head office in Denver, Colorado, opened in May, and then also a Chinese manufacturing facility, which they expect to have completed by the end of 2020. So that should be complete now. I haven't seen an update on that just yet, but obviously that's a massive new building that they've got underway, which should help to increase their production volumes. So on their FY21 outlook, as we mentioned before, they're not giving us any guidance. However, they do give us some summary points here about what they're expecting. So you can see the second wave shutdown is definitely a risk, and especially in emerging markets where cases have continued to grow. Obviously, elective surgeries have remained very low. Insight into a new candidate pipeline expected to take a few months. So this is obviously a new product that they're planning to release, and with the way things are at the moment, there's going to be delays, but what we do know is they're continuing to invest in R&D to extend their product portfolio, and investment in awareness and referral channels to gain sales momentum as well. So look, overall it might be a slow start to FY21, but things will recover eventually, and as they do, I think Cochlear will do better and better. So I'll probably wrap up with this slide on Cochlear, and it's talking about investing to grow. And this is like a fundamental driving principle behind the business, which really attracted me to make this purchase. So Cochlear takes a long-term approach to investing and has invested in growing the market for implantable solutions since listing in 1995. So we can see their selling and marketing expenses have remained pretty much the same, and so has their R&D. They haven't stopped research and development despite their sales revenue continuing to increase. So that's a real big positive. So the investment in R&D continues to strengthen our leadership position through the development of market-leading technology. Cochlear has a wide range of fully featured products and a broad patent portfolio that protects the company's IP. Over $2 billion has been invested in R&D since listing, with 14% of sales revenue invested in R&D in FY20. So they're heavily invested in continuing to develop products, and I think this is critical for their long-term growth and continuing to grow at around that 15% mark. So, and we've seen and noted before that R&D spending did not get hit during 2020, and so that means I think we'll see a big rebound in the company's performance. And here it talks about their financial position, talks about their operating cash flows and their disciplined use of capital, and it is their policy to pay out around 70% of operating cash flows as dividends. So that's something that's consistent. So that growth in dividends they're not pushing their payout ratio to ridiculous levels in order to maintain that dividend growth. It's a flat 70%. So it's only as profits grow, the dividend grows. So their dividend is an accurate representation of how the company has been performing in terms of net profit, which I think is really neat. Now we'll get to my financial breakdown of the company in a second, and what we'll notice is one of the metrics, which is their net debt, has increased exponentially, and they explain that here. So conservative gearing levels, they've talked about in the past, they've been very, very conservative with their gearing and borrowing for that matter, and they've been able to fund their investing activities, dividends, capital expenditure and acquisitions whilst maintaining this conservative gearing. However, in FY20, they had to dig into the debt in response to an adverse litigation judgment and then also the conditions throughout 2020. So that's why we've seen this massive spike down. Unfortunate, but I think they'll recover once they build up that cash again, and it's obviously not the company's preference to go that much into debt. So it's something I'm willing to look over. Some people would say no, they've entered into too much debt, I'm not interested, but I think clearly they're stating here that that's not how they want to be operating. So I'm going to let them off on this one, and that's another reason why I chose to purchase the company. If we come over to this spreadsheet, I've done a fundamental analysis on the company. We can see most of the metrics are looking pretty good. Here's that debt to equity figure we talked about, a big jump from 24 to 50% in 2020. We've just spoken about why that happened. Return on invested capital is very high. Equity growth is excellent and has been for the past 10 years. Earnings per share has just jumped over 15%, which is that key cutoff point for what I consider to be a great growth stock. And then we've also seen, over the past 3 years and 5 years, that's been respectable as well. Net income after tax hasn't been increasing at a rapid rate, but it's been okay. But I'm willing to look past that considering how well the other metrics have been doing. And revenue is a similar story, that it sort of started to soften a little bit. So we'll hope to see a rebound in 2021. I guess in summary, this isn't a perfect company on paper and obviously has suffered during 2020. But I think that because their performance has lacked a bit, I've been able to get in at a respectable price. But given the company's strong history, their extensive research and development, and the nature of their product, I think, or I'd like to expect that there'll be a strong rebound. I think they're well managed, and I think they'll definitely prevail from the conditions that they've been experiencing. Well, that's all from me for this episode. I'd love to hear your thoughts and opinions on Cochlear. Do you own the company yourselves? What do you think of my investment? As always, drop a comment below. Keen to have a chat with you down there. Don't forget to like the video and please subscribe to the channel if you'd like to see more content just like this. Until next time, thank you so much for joining me. I'll see you in the next one. Cheers.